So, okay, let's go to Dave Ramsey for a second. Why is Dave Ramsey telling people as just like a blanket statement, this is the only way to do it? If you, in fact, he'll go as far as saying buying anything, whether it's IUL or whole life, is a scam. I can find a video that says this is a scam. So, bright guy like Dave Ramsey, he's worth $100 million or more. Why does that guy teach people that term insurance is the only way to go? You've just made the argument, at least to a small degree, right? We're actually suggesting that term insurance is a valuable thing and really useful. We've got Dave Ramsey suggesting that it's the only thing that's useful. Let's move to that side of the coin.
I think there's a couple ideas or things that go through my mind when I hear him say things like that. First off, you got to think about who is his audience, right? He's built his hundreds of millions of dollars in his businesses, basically helping broke people get out of debt. Like everything you hear him talking about is reduce your spending, make more money so that you can live a debt-free life. And I think probably for a large percentage of America, that's the message that they need to hear, right? And so going back to what I was saying about quote unquote costs of insurance, if you're going to try to cut costs, if that's your goal as much as possible, for the dollars that you're putting into a term insurance policy, you're going to buy many multiples of what you're going to get in terms of a death benefit versus what you put into whole life, right? So that's kind of his primary focus. Where I think he maybe misses the boat a little bit is that he's only looking at the insurance portion. So he's not looking at it as a wealth building tool. So he's just saying, if you put your money here or here, where are you going to come out ahead? And he's also only doing that analysis over, a 20, 30, 40 year period before people actually are in retirement and go to pass away. He talks about this idea of being self-insured, where really self-insured means that you don't have any insurance, right? You either have insurance or you don't have insurance. In reality, permanent life insurance in various forms, we can get into more of this, can play a big role.
Oh, we will, Blake. We will.
Okay, post 55 years old, there might be a reason or two you would want to have a different type of insurance as opposed to a term insurance policy that's expiring.
Yeah, there's no question. He does not value insurance once you get past that point, because if you plug into his system and you do everything he tells you to do, you're going to have enough assets by the time you get to, again, depending on the age, 55, 60, 65, your retirement years, that you do not need life insurance. It is an unnecessary thing in your life. You just will not need it, period.
Yeah, obviously, because this is easy. All you need to do is get a consistent 10 to 12% return in your mutual funds year in and year out for 30 to 35 years, saving your IRAs and 401ks, and then you can throw out that 30-year term insurance policy that you've been trashing your money on all these years, and now you're set to live the 4% rule and fly off into retirement comfortably. That's basically the plan, right?
Yep.
What's really amazing, though, to me is that Dave Ramsey hasn't changed the plan in 30 years. He doesn't care. He's like, this has made me a lot of money. I'm doubling down, man. I am doubling down. And so today, we're still getting this mess about 4% rule and buy term. Okay,
but it gets even worse than that as it relates to Dave specifically, because if you go on his website and you look and see, hey, how's the retirement plan going to work? Guess what percentage he tells you can safely take?
I saw this earlier. It's like 8, right?
It's 8.
It's 8. And
he's like, hey,
he plays out
sending people into poverty.
Yeah, he plays out this scenario. He's like, well, if you're earning 8% in your return in your investments, then you can live off of that. It's just your asset stays the same. You're just living off of the proceeds because you're getting 8% every year. This is basically how it goes. So
and that is just so overly simplified that it's kind of scary, because we deal in real people's money, right? So we have to actually see the result of somebody saying, you know what, I'm going to take on the risk of taking an 8% withdrawal, which, by the way, he's the only one doing that.
Agree.
Even inside the industry, people aren't saying that. We've talked about how terrible the 4% rule is. The 8% rule is just like a kiss of death.
Yeah.